Welcome to Everything Money. In this video, you will learn how to look at the EV car company Lucid Motors. We will take a fundamental analysis looking at the financials through our software, and we will move toward a price you should be paying moving forward for this stock. If you're looking to trade Lucid at a quicker pace, we'll head over to Mo and he will show you all the trends and charts. But first, why should you watch a video with us? I bring your normal person questions about this new company to a couple guys that manage over $100 million in real estate, multiple businesses, and stocks, and we will talk about all of it right now. This is a crazy EV car company. It's had a rocky road, and we'll tell you all about it. Paul, tell us about it.
Thanks, Seth. So first off, follow us on Instagram. We have a new Everything Money account, and then follow our personal accounts because our mothers do watch those.
And we're very vain.
And we're very, very vain. So, and you can see great pictures of dogs.
Yes.
So Lucid, can we show your screen?
Yeah, look at this thing. I mean, we're in love with the car.
I'm sorry. This is way better looking than the Tesla. I apologize. To me, this is an absolutely gorgeous car.
Am I wrong, Mo? I mean, look at this thing.
Oh, it's beautiful.
Is it really 520 miles?
Yeah, allegedly. I remember when this thing came out in 2018 as a concept, I was like, man, this is incredible. And the Saudis put $1 billion into this, so they were going to get off the ground.
So I'm going to add, so guys, people are watching right now. A lot of people out there will say, go research the company, then look at the numbers. They are 1,000,000% wrong. Yeah! What they're doing is they're falling in love with the company, and then the numbers don't matter, and they can use any justification for why the numbers are terrible.
Double down on that, Paul, because this is huge. You can talk yourself in. If you watch all the videos on Lucid, they're just going to keep saying all the things they're going to do, everything that's going to happen in the future, which might not happen at all. But right. I love when you bring this up, the idea of like...
So there's 10,000 stocks out there. A good value investor will have a screening process first. Every good value investor, read about all of them, they start with a screening process first. Then from there, they look at their investments. These are the ones that fall and they go, okay, let me go do more research on them to figure out which ones are actually, because guess what? 70-80% of value plays are value plays for a reason. Like they're not good companies. You don't want to be owning them. So you have to do more research later. If you spend all your time researching a company and then, for example, this iPhone, let's talk about the merits of this iPhone. It's wonderful. It's got a great this, it's got a great that, it's everything, it's perfect, it's amazing, blah, blah, blah. Could not find a better phone. Great, $14 million. If you just told me $14 million to start, it could literally do sexual things for me, and I'm like, I'm not buying it.
I knew you're headed there, yeah.
Right? It's a stupid, but everybody out there wants to fall in love with the iPhone first, and then later go, okay, what's the price? Okay, well, it will do sexual things for me, so maybe that's okay. That's all you're doing.
Well, Paul, this was ad nauseum out of stock mode telling us that when CCIV was going to merge with Lucid in the past year, it was going to be the best thing to ever happen. And for those of you who listened to him, bought CCIV, and that got crushed on the merger, we welcome you to our channel with some different news. So keep going, Paul.
So let's go look at the stock now. This is our Everything Money software, which we'll talk about as time goes on. We go to Lucid Group. Okay, guys, so this was part of the SPAC that was at $10. It went as high as $58 in February, dropped as low as 16, 17 bucks, and now it's back up to 42. Okay, so guys, the way I look at companies, here's the income statement for the company. Awkward. There's no revenue whatsoever. So the way a value investor likes to look at a company, we like to be able to find companies that we can project how much money they'll make in the future. Now remember, the future is unknown. We don't know what's going to happen, but every investment is the present value of all future cash flows. Just think about that over. If you're new to the channel, you got to really embrace that. If I told you today that I'm going to give you $1 million in 10 years, what would you be willing to pay me for that today? If I said I was going to give you $1 million a year for the next 10 years, what would you pay me for that? But the way the average person looks at it is, I bought a ticker symbol, I want it to go up. Well, how does it go up? It's driven by, in the long run, by the fundamentals of the business. So we look at the fundamentals of the business. There are no fundamentals in this business. There's no revenue. There's only losses. They lost $1.5 billion. There's nothing here for me to sit there and say, I can reasonably predict what's going to happen in the future.
I think what a lot of people are doing, Bo, is reasonably saying that all EV companies are going to completely explode and take over the world. So this has to go up.
And in 1910, the auto industry was in its infancy, and I don't think the airline industry even existed, right? In the next 100 years, both of these industries absolutely exploded, did amazing. And guess how many thousands and thousands of car companies and airlines went out of business?
Thousands.
Thousands and thousands of companies went out of business. So they had this amazing future, and yet 30 years ago to today, the auto industry is way bigger, way better. The auto industry is way bigger, way better. But still, in the last 30 years, how many of the big three have gone under? Two of the big three have gone under in the auto industry. Yep. Every major airline except for Southwest basically has gone under. Not really true, but pretty much all of them have, sometimes multiple times.
Yep.
So I don't want to hear you guys say like, well, the industry is huge. That is first level investment thinking. That is not thinking smart. That's not thinking domino. That's just saying, oh, this is huge. Great. Go to your local high school, find the best baseball player, go give him $30 million a year. Why? Because he could be the next big thing. That's what you're doing when you buy companies like this. There is nothing here for me to look at. No price to sales, no free cash flow, no average free cash flow, no 5-year return on invested capital. Go, if you don't believe me, go watch our other videos. Go look at a company. So Lucid, if everyone's gonna get mad at me, why are you comparing Lucid to Ford? Because it's a car company. By the way, let's look at Tesla. At least with Tesla, I have something to look at. At least with Tesla, I have free cash flow last year. I have revenue of $46 billion. I have net income of $3 billion. And by the way, Tesla's insanely overpriced. But at least I have something to look at. I have a margin, a profit margin. I have a gross margin. I have nothing with Lucid. You could be right on Lucid. But if you're right on Lucid, it's because you happen, because a stop clock is right twice a day. That's just it. So I look at these companies and I look at it as what is the present value of all future? That's our process that I teach here. That's what our software does. We made this software so people could analyze companies. So you could sit here and look at the financial statements of these companies. You could become an astute investor. We made the stock analyzer tool because every investment is about the assumptions in the future, right? And those assumptions have to be, we don't know the future, but our job is to look at the future and say, what's a conservative and what's an aggressive? We have 3 levels here that we can make assumptions on, low, middle, and high. Go in here and it'll tell you exactly what you should pay for the stock price today based on what return you want.
Paul, I think this is a delivery that you give, which sometimes you give harshly, that people just straight up don't want to hear. I've heard an argument about our channel, Mo, is that people say, you know what? I just want to believe in growth. I want to believe in prosperity.
You can.
And value investing is just waiting for a huge...
No, that's so somebody wrote me a message yesterday. You're a perma bear. Oh, so what's a perma bear? A perma bear is somebody who thinks that the market's always going to go down. If that's the case, I will show you emails from 2009 when my lawyers and my accountants and my financial guys in Chicago said, you're the only good phone call we have. You're the only one buying. If I'm a perma bear, why was I buying? Because I react to valuations.
There you go.
If this phone is worth $1,000, I don't touch it at 3,000. I buy every one I can find at 500.
Yeah, you really
every single
do.
one I can find at 500. If I told you today, go buy a Ferrari, how much? Well, that's what we're doing in the market right now. It's not go buy a Ferrari, how much? It's go buy a Ferrari because it's the best car out there. Well, I sit there and say, well, if I can buy that Ferrari for 300 grand, if it's selling for 800,000, why would I buy it? But if it's selling for 150, how many can I find? Please, I don't care who you are, I'll buy your Ferrari.
Yeah, there's a difference between negativity and fact and numbers, and
optimism,
they just work. It's
optimism is about I'm positive about the U.S. economy and companies in the future.
Correct.
But there are going to be hurdles along the way, and I'm acknowledging those hurdles and saying, hey, I choose not to be in the market at this time. That's fine.
And eventually we're going to be huge bulls when everybody else is a bear, and then when you guys are bulls again, we're going to be bears again.
Probably.
This is how it works. Just goes like this. But you guys don't understand that because you just think it goes like this. Or
so
this, whatever.
With Lucid, it's a market we're in right now where we look back, we're going to look back 20 years from now and go, can you believe this? There was crypto, there were car companies with no revenue that were valued at 30 times sales, and the average car company was 0.6. Can you believe how stupid people were? I'll be like, yeah, that was you. I remember my financial guys in Chicago saying, well, yeah, Paul, the real estate market was obviously overpriced back in 06. I'm like, that's weird because you guys had clients that were killing the real estate market and you weren't warning them, hey, be careful here. You were like, you guys are doing awesome. And those clients went under. That's it. So when it comes to these companies, we create the software so you can analyze a future stream of cash flow. How you assess it, how you make your assumptions is all up to you. That's based on your research. But first start with an area of saying, I look at Tesla. As much people argue with me, I look at Tesla. It is selling for 23 times revenue. Okay. You might sit there and say Tesla's not a car company. It's a tech company. Congratulations. 85-90% of its revenue comes from cars. I look at Ford. Instead of 23 times revenue, it's selling for 0.6 times revenue.
Paul, I hate to break it to you, but Lucid's market cap is almost Ford. It's off by only $8 billion, and they've only made 500 vehicles ever.
Well,
I think
you're smarter than me then.
Ford makes 500 vehicles per
So people's most common criticisms, Paul, you don't get it. And I go, yeah, you're right. I don't understand it. I don't understand how you can give Lucid a market value. Guys, go look at, you can't even tell me what we're going to do next week with accuracy. How are you going to tell me what a car company is going to do in the next 10 years with accuracy?
So as a new investor, Paul, who's seeing a bunch of other videos on how great Lucid is, what can they do moving forward?
Go learn a process. We're all trying to teach a process here. I don't care what your process is. Find a process that works. We do charts here with Mo. Mo will show you the charts on Lucid in a few minutes. I do momentum trading and value investing. It's a process that works. It's fun for me, but what's been proven over time is a process works. If you stick to if you find a process and you stick to it, a process that's been proven to work.
I was going to say, yeah, but I think some people's process is watch YouTube videos and then invest in hype companies. It's a little dangerous, wouldn't you say?
Do whatever you want, but at the end of the day, unfortunately, people have to be hurt in this market. We got to have a lot of people learning a lot of tough lessons. That's just the way it works. It works in cycles. Markets are all cycles.
If you want to trade Lucid at a quicker pace, you can join Mo in the Bitnass Nation. He'll show you how these trends move up and down and how you can make money, not a long-term play, but a short-term. Go ahead, Mo. What's going on with Lucid?
So there's two ways of doing this. Not a long-term perspective. The one way to do it is here on a swing trading chart where you can kind of catch these little runs that happen and kind of make some money here and there. Now, the better option, I would come over here to the 15-minute chart, and this is what I would do with it. This is taking one of those candles that I just showed you and opening it up. So every single one of these candles is a 15-minute period. There's basically 3 rules that you follow over here. You look for your stochastic to be over 80%. You look to see if you're getting good volume, and you buy on engulfing candlesticks. All you do is sell is when you drop below that 80% on that stochastic. It's as simple as that. This is how you play companies like this. If you wanted to play Rivian yesterday, go for it. If you want to play Beyond Meat, go for it. If you want to play a company like this, what is this called? Lucid. Go ahead and play
By the way,
them.
No, look what he just did. He said, what is this called? He doesn't care.
No, I don't care.
Bleep out the name. Who cares about the fundamentals? If you want to get in the game, learn that process.
And guys, if you want to go short, here, I just noticed this. It's the same thing when going short, just the opposite. Be below 20% on your stochastic, have engulfing candlesticks coming down, be getting good, consistent selling volume, and you can make money on the way down just as easy as you can go up like you can today. This is the process that you want to learn. Learn how to do this. This is how you make money on these crazy companies.
And it's amazing. Every single person that joins the Bitnass Nation over there, we get messages like, I've paid for 4 years of my subscription by just 1 week of trade. It's like, guys, the process works. And you know what? We have a great interview coming up with Jerry Parker from Momentum Trading. Jerry is one of the best considered the best turtle trader of all time. He always says, I did worse when I deviated from my process.
If this resonates with you and you'd like access to these financials, you can get them by joining our community, and you can look at companies like Lucid to help you avoid a huge loss on a company like Lucid by looking at the numbers. Paul, tell them how.
So this is the software. You get news, you get all YouTube, you get everything coming here. The 4 tools that are already here, plus everything that's coming. You get access to Seth, Mo, and I. You get daily exclusive content, 2 or 3 videos a day, sent only to the people who subscribe to the software. And most importantly, though, you get over 6,000 people in our currently subscribers you can talk to in a very organized way about all your investment ideas, because like you, they probably are on their own little island where nobody believes in what they're doing, but this makes sense to them. So join. It's only 90 cents per day. If you can make 1 or 2% a year for only 90 cents a day, this could lead to hundreds of thousands, if not millions of dollars in extra value, extra net worth for you in the future for only 90 cents a day. 2 ways to sign up: everythingmoney.com, Patreon. The benefit of everythingmoney.com is you don't get double charged in the first month like on Patreon, and we don't pay sales tax. We don't charge you sales tax yet because we're not big enough. So 90 cents a day, sign up. Every month that the price goes up, you stay in your current, whatever price you paid, you stay with that and you get everything else.
If this process resonates with you, watch more of our videos. We have over 1,000. We have a growing community, one of the fastest growing financial YouTube pages out there, and we welcome you in. Fondle the thumbs up like you tickle Paul's belly, and we will see you next video.